Welcome back to the Rooster Podlog, everybody. Ready for another deep dive.
Absolutely. Let's do it.
Awesome. Today we're going to be talking about a couple things. First, we're going to be delving into the unexpected extended stay and eventual return of some NASA astronauts from the International Space Station.
Oh, wow.
And then we're going to shift gears a little bit, and we're going to unpack some of the timeless investment wisdom from the legendary Peter Lynch.
Sounds like a great pairing.
Yeah, should be a lot of fun. So let's jump right in. You hear about astronauts going to the International Space Station for a week, maybe two, a few months. But what happened with Butch Wilmore and Suni Williams was something else. They ended up spending a really remarkable amount of time up there.
Yeah, for sure. I mean, their mission was originally slated for 8 days, just 8 days, and they ended up being up there for 285 days.
Wow.
That's over 9 months.
That is a long time.
It's crazy. You can imagine packing a suitcase for a week and then suddenly your address is in space for the better part of a year. I mean, that's got to be a whole other level of adjustment.
Yeah. Like, where do you even begin to prepare for that kind of situation?
Right. And the return itself was also a pretty big event. I mean, it happened on Tuesday, March 18th, 2025, at around 5:57 p.m. Eastern Time,
Okay.
ending with, you guessed it, a splashdown.
A splashdown, huh?
Classic.
Where was the splashdown, by the way?
It was off the coast of Florida. They used a SpaceX Dragon capsule to bring them back, which, it just shows how much NASA is partnering up with commercial companies for space travel now. It's becoming the norm.
Yeah, it's been a really interesting shift to see. But why a splashdown, though? Like, what's the benefit of bringing them back down in the water like that?
Well, for the Dragon capsule especially, splashdowns give you a much smoother, more gentle way to slow down, especially when you're coming in from space. Think of the water as a big cushion.
Ah, makes sense. So Butch and Suni weren't alone on that journey back, were they?
No, not at all. We also had Nick Hague, another NASA astronaut,
Okay.
and Alexander Gorbanov, who's a Russian cosmonaut.
Wow. So a truly international team coming back to Earth.
Exactly.
All right, so let's get into the big question. Why did their mission get extended so much? What was it that kept them up there for so long?
So it's interesting because it wasn't actually anything to do with their mission on the ISS or their Dragon capsule. What kept them up there were some pretty serious technical problems with the spacecraft that was supposed to bring them home after those 8 days. The Boeing Starliner.
The Starliner, right. I remember some talk about that. What exactly went wrong with it that prevented it from bringing them back?
Well, there are a few things. And they were serious enough that NASA basically said, nope, it's too risky for the astronauts to use this thing. We're talking helium leaks, which are really important for pressurizing those fuel tanks that power the spacecraft's engines. And without the right pressure, the engines might not fire properly when they need to, like when they're undocking or doing the big deorbit burn to come back to Earth.
Okay, so helium leaks, that's one problem. What else?
Yeah, and then there were also issues with the thrusters, those little engines they use for fine-tuning the spacecraft's orientation. Super important during those delicate moments of leaving the ISS and coming back into the atmosphere. And just to make things even more interesting, they had a propellant valve failure, which could have totally stopped the engines from working.
Yikes. That's a lot of things to go wrong all at once.
It was. It wasn't just a minor glitch. It was a whole bunch of red flags.
So with all that going on, I can see why they decided to wait it out on the ISS until they could get a safer ride home. Must have been a pretty surreal feeling for those astronauts realizing they were going to be up there way longer than expected.
Absolutely. I mean, when it comes to spaceflight, astronaut safety is always a top priority. So extending their mission was the right call, even though it probably disrupted everything. But it just shows how important it is to be able to adapt in space because things don't always go according to plan.
Right. Makes sense. So how did they spend their time while they were up there for that unexpected extra time? Were they still able to do any work on the ISS?
Oh, absolutely. They were incredibly productive.
Wow.
Despite having to completely change their plans, they managed to conduct over 150 different scientific experiments
Oh, wow.
in all sorts of fields. They also took part in spacewalks to do some essential maintenance and upgrades on the station, and they just kept contributing to the everyday running of the ISS. Talk about dedication and adaptability.
Yeah, it's amazing how they managed to stay focused and make the most of the situation. So when the Dragon capsule was finally ready and they got the green light to come back, what was that journey like?
So they undocked from the ISS really early on the Tuesday morning, like 1.05 a.m. Eastern Time. And then the whole journey from that undocking to splashing down in the Gulf of Mexico took about 17 hours.
Wow. 17 hours to go from zipping around Earth at thousands of miles per hour to gently floating in the ocean. How did they even slow down that much?
It's pretty incredible, right? It's a carefully planned process. The Dragon capsule fires its engines in a specific sequence to gradually reduce its speed, which is, around 17,000 miles per hour when it's in orbit. Then, as it starts entering the Earth's atmosphere, it hits a lot of air resistance, which slows it down even more. And finally, in the last part of the descent, a bunch of parachutes deploy. And that's what allows them to splash down nice and easy at a speed of about 17 miles per hour.
So from 17,000 miles per hour to just 17, that is a serious slowdown. And it sounds like the landing itself went really smoothly.
Yeah, it did. NASA described it as a beautiful landing, with perfect weather in the splashdown zone off Florida. And get this, people even saw dolphins swimming near the capsule as the rescue teams were coming to get them. Like a welcome home committee from the ocean.
Oh, that's fantastic. Dolphins escorting them back. I love that. Okay, but after such a long mission, what happens next? What's the process like for getting them out of the capsule and making sure they're healthy?
So right after splashdown, the rescue teams get to the capsule and get the crew out, Wilmore, Williams, Haig, and Gorbunov. And the initial reports said that they were all in good shape after that long mission and the wild ride back to Earth.
Thank goodness for that.
Yeah.
But I bet they still go through some pretty thorough medical checks, right?
Absolutely. They flew them to NASA's Johnson Space Center in Houston for a few days of really detailed medical evaluations. That's standard procedure after any space mission, especially one that lasted so long. They need to check for things like muscle loss from being in microgravity for so long, and they also have to look at their vision, which can be affected by space travel.
Makes sense. I mean, their bodies just spent almost a year in a completely different environment.
Yeah.
So beyond the medical checks, what's next for them? Do they get some well-deserved R&R?
Well, according to Steve Stitch, who's a NASA manager, the plan is for them to get some much-needed time off with their families once they're done with the medical stuff and all the debriefings about their time on the ISS.
Yeah, after everything they've been through, they definitely deserve a break. But they weren't just hanging out up there, were they? They were also doing really important work for future space missions, right?
Exactly. NASA Administrator Joel Montalbano pointed out that they managed to rack up almost 900 hours of scientific research while they were on that unplanned extended stay. And this data is going to be super valuable for NASA as they continue to plan for future missions to the moon and beyond. They were working on things like how the human body adapts to long-duration microgravity, which will be really helpful for those longer missions to the moon where the gravity is much weaker than on Earth.
So even though their mission didn't go as planned, it still ended up producing a lot of great science.
It definitely did. It shows that sometimes even unexpected challenges can lead to big scientific discoveries.
So what's the big takeaway from this whole story for you?
I think it really highlights the strength and resilience of these astronauts. To be up there for that long, dealing with all those unknowns and still staying focused on their work, it's incredible. It also says a lot about NASA's ability to solve problems and adapt to unexpected situations in the very challenging environment of space. They never wavered on their commitment to keeping those astronauts safe, and they still managed to get a lot of valuable research done even when things went sideways. It's a testament to human ingenuity and determination, which, is something we also see in successful investing, like with Peter Lynch.
I like that connection, that ability to think long-term and stay strong in the face of challenges. All right, so let's switch gears now and talk about Peter Lynch. This guy is an absolute legend in the world of investing.
Oh, he's a rock star. He's famous for his simple but effective investment approach. It's all about research, long-term growth, and, not getting caught up in the hype.
Yeah, he has a knack for putting complex things into simple terms. And speaking of which, one of his quotes that always sticks with me is, when stocks are attractive, you buy them. Sure, they can go lower. I've bought stocks at $12 that went to $2, but then they later went to $30. You just don't know when you can find the bottom. I mean, it's so true.
It is. It's about having that courage to trust your research and not get scared away by those short-term dips in the market. Because you can't always time it perfectly.
Right. Sometimes you just got to take the plunge. So how did Lynch's approach to investing differ from the more complicated or traditional strategies out there?
Well, one of his big things was this idea of investing in what you know.
Okay.
He believed that anyone could find good investment opportunities just by paying attention to the things they use every day, the stores they shop at, the companies they see doing well. You don't need to be some Wall Street expert to do this.
So it's less about trying to decipher complex economic reports and more about observing the world around you and seeing what's working.
Exactly. It's about looking for those real-world clues. He was all about this bottom-up approach to picking stocks.
Bottom up.
Yeah. Instead of starting with the big picture, like looking at overall economic trends or specific market sectors, which is what people call top-down, Lynch started by really digging into the details of individual companies.
Interesting.
He wanted to understand how they made money, what their growth potential was, and what made them stand out from the competition. He called this the story of the company.
So it's like being a detective, but for companies.
Kinda, yeah.
And if you're listening to this, maybe think about the brands you use every day. Could there be an investment opportunity hidden in plain sight?
Exactly. If you already understand a business and its products, you're already ahead of the game.
Okay, makes sense. So Lynch wasn't just a growth investor or a value investor, was he? Like he didn't fit neatly into those categories.
No, he didn't. He's often associated with something called growth at a reasonable price, or
Yeah.
GARP. Yeah, JRP. It's kind of a mix of growth and value investing. He looked for companies that had strong growth potential, but he also wanted to make sure he wasn't paying too much for that growth. He liked to use something called the PEG ratio.
The PEG ratio.
Yeah, it's a way to see if you're getting a good deal for the growth you're expecting. It basically takes the price-earnings ratio and divides it by the company's expected growth rate.
So it's not just about chasing those super hot stocks that are growing really fast,
Right.
but making sure you're not overpaying for them, right?
Exactly. Find that sweet spot between growth and value.
Okay. Now, what about diversification? Some investors like to put a lot of their money into just a few carefully chosen stocks. Did Lynch do that?
Actually, he did the opposite. He was known for having a really diverse portfolio, sometimes with over 1,000 different stocks in it.
Wow. 1,000 stocks. That's a lot to keep track of.
Yeah, it is. But his thinking was that by spreading his investments out so much, he could reduce his risk and increase his chances of finding those really big winners, the 10 baggers, as they're called.
10 baggers.
Yeah, those are the stocks that end up being worth 10 times what you paid for them.
Ah, got it. So even though he had a lot of different stocks, he was still applying that invest in what you know principle.
Absolutely. He was just doing it across a wider range of companies and industries that he and his team understood.
Makes sense. Now, what about market timing? Trying to buy at the lowest point and sell at the highest? What did Lynch think about that?
He was totally against trying to time the market.
Really?
Yeah. He always said it was a fool's game. He thought investors should focus on buying good companies and holding on to them for the long term. That way, the value of those companies would grow naturally over time and you'd reap the rewards.
So goes back to that quote we talked about earlier, right?
Yeah.
Don't try to find the absolute bottom of the market. Just buy when you think a stock is attractive and then hold on tight.
Exactly. Because in the long run, the ups and downs of the market don't matter as much as the overall growth of the companies you've invested in.
Right. It's about seeing the bigger picture.
Yeah, and that long-term view is key to riding out those inevitable ups and downs. The market can be pretty unpredictable in the short term. There are so many things that can affect it that have nothing to do with how well a company is actually doing. But if you're in it for the long haul, you can kind of ignore all that short-term noise.
And it's over that longer period that the magic of compounding really starts to work, right?
Absolutely. Compounding is this amazing force in investing. It means you're not just earning returns on your original investment, but you're also earning returns on the returns you've already made. So your money can grow much faster over time.
Right.
And that long-term approach also helps you avoid making those impulsive decisions based on fear, like selling everything when the market takes a dip.
Yeah, that makes sense. You're less likely to panic when you're thinking long term.
Right. Because if you have faith in your investments, you know that those dips are probably just temporary. They don't mean that your companies are suddenly bad investments.
And that's where rebalancing comes in, right? Taking advantage of those market swings to adjust your portfolio and maybe buy more of the stocks that have become cheaper.
Exactly. Rebalancing is a great way to keep your investments aligned with your overall goals, especially when the market is going up and down a lot.
And at the end of the day, the market has historically gone up over time, hasn't it?
That's the main idea behind long-term investing. There will always be recessions and corrections, but if you look at the big picture, the stock market has generally been trending upwards, and that's why patience is so important.
Makes sense. So to really illustrate Peter Lynch's quote, you have that story about an investor named Emma. Tell me about her.
So imagine this. Emma's been following Lynch's principles, and she's done all this research on a green energy company called Ecotech. She really understands their business, she sees how much demand there is for their products, and she decides to buy some stock at $12 a share.
Okay. Sounds like she's off to a good start, putting those research principles into action.
Right. But then, shortly after she invests, Ecotech runs into some trouble. Maybe their supply chain gets disrupted, or there's a new regulation that hurts their business, and the stock price drops to $2 a share.
Oh, no.
A lot of investors would probably freak out and sell everything at that point, right? They'd be afraid of losing even more money.
Yeah, that would be a tough situation to be in.
It would. But Emma remembers what Lynch always said. She goes back and looks at her initial research,
Okay.
and she still believes in the future of green energy and in Ecotech's potential to be a leader in that market. So instead of panicking, she decides to hold on to her stock.
So she's sticking to her guns, trusting her gut, and believing in her research.
Exactly. And fast forward a few years, Ecotech overcomes those challenges. They launch some awesome new products, they expand into new markets, and their business starts booming.
Oh, wow.
And guess what? The stock price goes up, 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 and it ends up reaching $30 a share.
So she bought at $12, saw it plummet to $2, and then it soared to $30.
Yeah, and it's all because she stayed calm, had faith in her research, and didn't let those short-term dips scare her off.
That's a really powerful story.
It is. It shows that sometimes those temporary setbacks are just part of the journey. They don't necessarily mean a company is doomed.
So for our listeners, what are the key takeaways from Peter Lynch's investment philosophy? What should they keep in mind?
I'd say there are a few big ones. First, focus on companies you understand. Don't invest in something just because it's trendy or someone else told you to.
Okay.
Second, always do your research. Really dig into the numbers, understand the company's strengths and weaknesses, and look at their competition.
Got it.
Third, be patient. Don't let those short-term market swings freak you out. Stick to your plan.
Okay.
Fourth, diversify. Don't put all your eggs in one basket. Spread your investments out to reduce your risk.
And lastly,
Look for undervalued companies. Find those companies that have good growth potential, but that the market hasn't fully recognized yet.
so it's a mix of common sense, research, and patience. And Peter Lynch's success proves that anyone can do this, right?
He showed that you don't need to be a Wall Street insider to be a successful investor.
Awesome.
If you're disciplined, you do your homework, and you think long-term, you can build wealth over time, just like those astronauts, you know? It's about adaptability and seeing the bigger picture.
I love it. This has been such a fascinating deep dive. We've gone from the incredible resilience of astronauts in space to the down-to-earth wisdom of a legendary investor. Hopefully, this has given you some new insights and maybe even sparked some ideas.
It's been fun.
It really has. And, it makes you think, what companies or products in our own lives could be those hidden investment gems just waiting to be discovered?
That's the fun part, going out there and finding them.
Absolutely. All right, that's it for this deep dive, folks. Until next time, keep exploring.